Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 15th, 2016. We might as well call this Video Thursday because this is the third, and I promise, final video of the day. I usually don't, well, I've never done 3 videos in one day, so I'm doing that because there's a lot going on in the market recently. We've had an increase in trade ideas, although the trade ideas are still below typical levels, what I've averaged for years on the site. We've seen an increase. And I figured that video was worth doing because we have quite a few short trade active shorts, more active shorts than longs right now. So I wanted to update those. I know quite a few of you are in these, and I already expressed my thoughts on the broad market today in a video. I also covered the gold stocks. There are a few gold stock trades in here, so I'll touch on those lightly because they were already covered in that other video. And I'll reiterate that despite today's action in the broad market, it did stop out the QQQ trade for a very small loss. We're talking under 2%. I kept the stops tight on that one on purpose. But what I saw today, based on all the market action, everything taken in together, what the SPY did, what some of the other indexes did, how this market's following Apple up on really no fundamental good news. I view this as a one-day wonder and didn't cover any positions today. I'm on the short side, and we'll stick with everything I have for now. We'll see how tomorrow and early next week turns out. But again, these stops I'll leave in place on all these trades. If they get taken out, those are the official stops. Those trades will be removed, and each of you decide what you want to do is where your comfort level is, but I just want to share my thoughts. Quick overview on how the trades are doing. They're sorted by, what I did on this watch list is input the entry price on each trade in this column. Now, TC2000 doesn't account for, there's no way to on a watch list to say it's a short trade. The system, their track watch list is a little archaic. You can only put in your entry price, and then it'll assume it's a long trade. So what you're seeing here on short trades, if it's red, if there's a loss, that's the percentage loss right here from the entry price. So that's that's how much the trade is up. We're profitable. I use a different calculation when I post the percentage gains on the front page. It actually understates the return. In other words, I take, when you sell short, you're selling up here and you're buying down here to cover. So what I do is I include this as the I'm sorry, I do include this as the entry price and this as the cover price. I don't take the buy to cover price and put that as the purchase price, and this is the selling price. That would actually overstate the actual gain. And my view on that is you're risking this much capital. If you short a stock at 10,000 with $10,000 and you cover at $8,000, you put out $10,000 to make that $2,000. That's a 20% gain. However, if you buy a stock at $8,000 and it goes up to $10,000, you made $2,000 on 8, which you do the math, it's more than 20%. So anyways, that's how I calculate those gains, just so you know, on the front page. So these will a little bit overstate the gains, if you will. But let's dive into the charts and go over these one by one. Before we do, you can see there's a total of 14 trades. Right now, half are profitable. The first 7 are up here. Those are all profitable. These bottom 7 are at a loss. Most of those, if you look at these, this is today's gain right here, percent change. So let's look at these few here. CDNS, Cadence system, it was up 1.85% today to take that trade to a loss of 1%. So a good percentage of these were profitable going into today. So we had almost all of our short trades profitable before today. You can see NVIDIA up 3.77% today, and the trade is still only at a loss of 3%. So a lot of these went from profitable to either roughly break even or slightly negative today, and they're still comfortably, most of these are comfortably below the stops. Although I've kept stops relatively tight on these, some of these especially, like this QQQ trade. This one's been on forever, Priceline. I'll get to that at the end. That has a pretty big loss, but that's a long-term trade based on a weekly chart with much bigger profit targets in percentage terms. All right. HL, again, already covered in the video that I put out today updating the gold and silver mining stock trade ideas. But Just a beautiful chart, looks great. I don't see anything to even remotely in this chart that tells me that this trade doesn't have more to go, more downside. With that being said, anything is possible. So if you're happy where you're at in T2, you've had numerous opportunities to take profits, but you can of course lower your stops right now. I'll leave my stop alone right now at stop over 730. But this trade, again, based on everything I'm looking on the charts, the fact that failed the bullish crossover there on the PPO, first wave down, second wave up, right to back test that former first target level, which is now resistance, and a move down. We've broken now below this T2 level, which was actually the actual supports at 559, and look where we came today. We closed at 557. So basically, there's a breakdown and a back test. And as I said earlier, the miners rallied today as a risk-on trade. Somebody didn't give them the memo that gold was down throughout the session, and hey, gold can be up tomorrow, gold can rally and catch back up, and then the miners will move up. But if they don't, and right now I don't see anything in the charts stating they will, or indicating they will, I'm sorry, then they're going to have to play a game of catch up to the downside, because they're going to follow the metal, especially if gold breaks that key support level I mentioned in that video. So HL looks fine for now. For a continued move down to 487, I don't see any risk with this trade. GDX, same story again, all covered in the video. This bearish PPO posture. First wave down, thrust back up to resistance, and GDX, even despite giving back, almost 0.75%, we're still up 7% on that trade. Yeah, you can say, my proxy is Nugget, but so you could say 21%. But I not really technically, because if you short Nugget, you should short a 1/3 position size to account for the leverage anyways, and it's all wash in dollar terms. You can say you made 21% on 10,000, or you made 7% on 30,000. What's the same dollar profit? Pandora, another one just looks good. And the point here is, despite this market's seemingly convincing rally today, most of what's on the trade ideas right now, all except for the QQQ trade, which had a very tight stop and was stopped out. These are stocks that we're shorting based on their individual chart patterns, and these are just beautiful patterns. Pandora's playing out despite a very strong rally in the market today. The stock managed to close flat. Couldn't gain, and just recently, since we shorted, we took this one inside the wedge. I was confident enough to short this in anticipation of a breakdown. We had that breakdown yesterday, very impulsive move down through the wedge, and despite today's rally, this thing couldn't even mount a back test. I really like that one, and I don't see any reason why that one won't hit the target in time. But there'll be stops along the way if you like taking tight aggressive profits. Early profits, there's a level right there. I can tell you 1288, so say 1292, 1294, you can book an early profit because you might see a reaction there. But if the market melts down and if they fade today's gains in the last 2 days, like I think they might, this thing will just come right down through there. MO, another one that's still very healthy, in the black, positive for us. Despite a give back of 0.21% today, this trade's still profitable at 4.22. I started this one right before. I don't think I put down. I started doing just recently suggested beta adjustment for trades, and I can't recall if I did one for MO. But if I did, this one you would have a beta adjustment above 1.0. In other words, this is a steady Eddie dividend paying stock. This is your grandma's stock. This is a stock that you put in a portfolio of someone that wants steady growth. They want a decent dividend, and these are the ones that I'm bearish on because of that. What I refer to as the dividend bubble right now. That's been burst. It appears to have finally burst, and therefore a 4.22% gain. You don't have a lot of upside risk. This isn't a stock that's going to run away on you. But with that being said, if you want to lower your stops, you can do so. But this one is well away from even being at risk of being stopped out right now. And everything I look at in the charts, breakdown, back test, and an impulsive move lower. tells me this one has a good shot of ultimately reaching, ultimately I think both targets, but you know, you probably see a reaction there around that first target, but looks good for now. UEC, this one, despite giving back 3% today, is still, we're still up by over 4% on this trade. So this one was up, you know, a 7% gainer. Something happened today. I logged on and all my annotations were gone on the UEC chart. I started to mock them up, replicate them, I should say. So these, I don't have the targets on here, but I think the first target was right around this level somewhere, and we came very close there. And just from the look of the chart, today's price action did absolutely nothing to damage it, the bearish case. In fact, you look at the PPO now crossing down below that zero line like I like to see. That's a trend indicator. On so many stocks, you can see how that the white line has remained above this zero line from this point. So from, you know, from here to here, it really defined this uptrend. Told you the stock was in an uptrend. Right now, we're crossing down below zero. You can see, I'll have to move this away, get this out of here. Here's another example of how well that works. One of the most simple yet effective trend indicators out there. Throughout this period, that white line, and I often talk about this, how the zero line not only defines bull and bear trends, but acts as support or resistance, boom, 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 when tested from below, above or below. And so what it did here, it defined this downtrend. And at that point, that was one sign, one early indication that the trend might be up, and it was. It mounted a very strong rally, had a little whipsaw here, and again, looks good right now, especially the fact that these both lines are clearly pointed lower. So again, I don't see anything in the charts to concern me on this one at this point in time. And again, if this market wants to blast off to new highs, it's going to take these out, and that's what stops are for. All these stops are calculated, you know, using you know, attractive risk to reward ratios, and but again, I don't see any risk in the charts right now. AVGO, this one, despite giving back almost 2% today, is still up by over 1%. So the stock is now down 1.12% from entry, and that's after today's give back. Just, you know, this is just, to me, it appears the first initial counter trend bounce after this bearish rising wedge breakdown, which we shorted, and this one should. You know, according to the charts, it looks like it'll continue to play out and hit at least that first target, and more than likely that second target down the road. And if things get really ugly, as is still priced into the charts, then we can head down there to that longer term target. But you remember, these aren't straight lines. They're drawn straight here, but there'll be zigs and zags along the way. And that's what each of these horizontal lines represent, a resistance level or a support level in this case, as well as this uptrend line there. But another one that's still positive. Nano, here's another one that gave back quite a bit today, up 1.66, but still positive. So we're still, you know, not only are our stops not being threatened at this point, we're still up on this trade. And we shorted this one here on the back test right there, and it seems to be rolling down. It has resistance there. So again, depends a lot what the market does in the next few days. Some of these may go further in the red, or we might see this column. A lot of these that went back. I should say in the red. These went into the red today. In other words, they're showing gains from where we shorted, meaning they're now at a loss. But most of these were profitable up until today, and that one is here's one, CDNS, Cadence. We shorted Cadence in anticipation right up here, in anticipation of a finalization of this right shoulder, which was finalized since. So we were positive, and had a reaction off the neckline today, which is perfectly normal. That's the initial tag. This tag here, we came down, closed on it yesterday. So this is your reaction off support, and that's very often the case on a head and shoulders, even if it is going to break down. We don't want to see this bounce too much more. Usually prices will have a little reaction, flounder around, and then break down. So the next sell signal will come obviously on a breakdown, ideally an impulsive breakdown below this neckline. But as of now, this one's just underwater by about 1% from where we entered, and still well above the stop. I think the stop on CDNS is at 25.30, and we closed at 2483 today. So we've got a little room to go there. Let's see, how high did we get today? High 2496. So yeah, it's got a little bit of room, but we'll like I said, we'll let these go if they get taken out, and we can always jump back in, guys. That's one thing. If you're in a trade, if you think a stock you're convinced is going to do something, it may do that move. Sometimes the market will fake you out, or an individual stock will fake you out, especially if it's a well-watched pattern. It's just how things work. And remember, you can always get back in. Better to stop out, get back in, than to see that pattern become foiled and watch a small loss grow into a big loss. SMH, semis, it's following Apple, following tech today, up very strong, 2.48%. We went from positive on this trade today, before today, was up 2.5%, to a small loss of 1.22%. So we're still comfortably above the stop on this one at this point. The divergences are there. I'm still quite bearish on the semiconductor sector, especially the chip equipment makers. And which reminds me, I think I need to add AMAT to this list. Yeah, we'll have to look at AMAT. I don't see that on here. Let's see. Next up, CDE. CDE is basically, we just shorted that one, and we shorted right here. It started to crack through that support yesterday and dojied right on it today. See this doji candlestick? In fact, we had a we were just on there yesterday. Came below it. This is one. Goodness gracious, I've been in this one since the original breakdown. It was covered in the mining stock video, and had the first thrust down, a reaction off that support level, came back down. And it's usually that second tag you're not going to get a reaction again. You can get a reaction. I mean, we've had a reaction in the sense we've paused there, but not a bounce yet. And to me, just like the rest of the mining sector, and again, I've gone over this one in the video today, very bearish action going on here on the PPO, both the bearish cross down on the signal line as well as that rejection on the attempted bullish crossover. Extremely steep rising wedge, and when the momentum gets going, I think we'll see still quite bearish on the mining sector, and I think it'll be a relatively swift move down to at least that 965 area. More than likely, I don't think this one will really give us a reaction until we hit that current final target at 866, with support being a little bit below that level. All right, Qs I went over today. Let's just take a look at that. Remember, I set the stop above this gap right here, the 117.23 level. I had it a little bit above. The stop was based on a 60-minute close above 17.59. So what you do is you look at these candlesticks. This one didn't close there. It closed at 17.15, even though it reached a high of only 17.41. Then this one did take it out. So that's the candlestick. So we look at that candlestick right there that was finalized at 2 p.m., printed a close of 117.59, so that is our stopped out price. We closed the day at 117.64, which is just a hair above. So like I said, the loss on that one's a little under, maybe 1.8%. And I'll take 1.8% losses all day as long as the risk reward is there. I've told you I'm still in this trade. I'll personally extend my stops right now only because of everything else I covered in the video today. The action in the SPY. Look at SPY trying to get back to 1530, but it couldn't do it. It's just come back to back test it. Small caps are still lagging way down. Mid caps still look weak. So trying to close right on resistance. That's why I'm giving my positions a little more room. All right, we're almost done here. DLB, Dolby Labs, Dolby Laboratories, Dolby Labs. Looks good. We had a breakdown. We had one back test of the wedge, rolled over, and a second back test. But this back test actually comes right in line with this horizontal resistance at 50.60. You can see that. Closed at 50.57, just above it. So you have dual intersecting resistance levels there, and uptrend line, which is defines the bottom of this rising wedge pattern, as well as that 50-60 resistance level, which you can see has capped all these advances going back for last couple months. And MACD the PPO is close to making a bearish cross, hasn't done so yet. That one, the stop, let's see where we're at. DLB stop is at 50.83. So it's pushing it. Yeah, we'll see what happens tomorrow. If we pop up in the morning, some of these stops might get run. I tell you what I do. It's hard to kind of put this in words in the post. I either use a stop on a close of a certain candlestick period, a 60-minute, a 15-minute, a daily. But if the market's poised to gap up in the morning, a lot of times what I'll do is temporarily suspend my stops, wait until the first 30 to 60 minutes of trading, see if that gap is faded, especially on trades that are really close and the patterns still look good. In other words, what I could see with this tomorrow is if we gap up tomorrow and they immediately fade the gap, that would put a candlestick wick or shadow, if you will, up in here, and then only to watch DLB close down below there. So it would look something like this. Imagine with a fat body down here and a candlestick close down here. But to keep it simple, that the stop is a stop. If they take it out, we can always enter this one again. I'll give mine a little more room, again, depending on what I see tomorrow, if it happens to run up through there. NVIDIA, NVIDIA. Let's see, this one was positive until today. We're now in the hole by about 3.1%, and that's because the stock gained 3.8% today. And so it still looks good. A lot of resistance up here at this level here, this horizontal line, and that big divergent high beneath that wedge tells me that even if this one wants to punch out to a marginal new high, I think the chances are very good, whether it does or doesn't, that this one's headed down to any of these targets, at least the official target right now at 51.88. And the stop on NVIDIA is 63.90. So we've got a little more than a point or so upside on that one. Priceline, this one, I don't know whether to leave this one on or not. I haven't owned this one in a long time, and I doubt anybody does because I haven't done any updates. I haven't heard anything about it. This chart, something happened to my chart here. I had something's going on with the TC2000 charts. All these trend lines have been moved. I don't know if this one's split or something, but let's see. If I move that trend line here, we'll have to look. You can look at the original chart. I shorted this one on a trend line break, and it's been back testing that trend line, and this chart is a mess. I do remember, and because I put it here, the stop is on a daily close above 1452. If anybody's in it, let me know. Otherwise, I might pull that one off. It's been on there so long. I think it already hit the first target, 1028, way back when. I'll have to look at the notes. I should have pulled the notes before I did this this video, but I haven't. Either way, it looks like it's wedging up now. You can see it's sort of pinching between those two. You have this trend line here and this uptrend line here. It's forming this wedge type pattern. It's probably going to go down soon. And again, I had a weekly chart. Let's see here. Okay, I figured I had taken this off to make a point between log in linear scaling. So here's the trend line. I must have had it. Yeah, this was it. I remember it now. That's why I was completely stumped on that chart. This is the trend line that we shorted, and it's pretty well defined. It goes back here, and we shorted this breakdown. It came back test, and it's been creeping up alongside underneath that trend line, now challenging these highs up here. So 1452, I'm sorry, was a weekly close. That's why it's not stopped out today. We need to see this one has until tomorrow to giddy up to the downside, or else it will print that stop, which is based on a weekly close above 1452. And again, if you're in it, let me know. Otherwise, I'll just might as well let it go. I almost hope it gets taken out. So just keep it simple and take it out on the official stop. But sometimes I'll pull a trade if the chart's just not playing out, if there's not a strong case to be made anymore. But I can tell you, I do think this one, it's coming. I'm seeing this in so many stocks. I don't know, whether this market has, 2, 3, 4% upside or 6, 7, 8% upside, but it would be very, very rare to see all these divergences, big, powerful divergences that mark, lasting tops, to see them all burn through, and they're not even at risk of being burned through right now. So Anyways, we'll wrap it up here. All right, this has been Randy Finney with Right Side of the Chart. And if you have any questions on any of the existing trade ideas, any of the unofficial trade ideas, any that were stopped out that you're still in, by all means, shoot me a message in the trading room and I'll be glad to give you my opinion on it. Have a great evening.